Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, September the 28th. The year's 2023. Let's talk trading. Trading stories we tell ourselves. Psychological levels with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal. Walmal, you just said right before the video you had some luck today with the psychological levels.
Yes, I did.
What time frame were you looking at?
I'm sorry?
What time frame were you looking at when you were trading?
I'm on a 1 minute right now.
Okay.
And that's what I traded this morning. And it wasn't that I was looking to trade off of psych levels as much as it became obvious when those things showed up on my chart, so I took advantage of it. And so I've made core, and I did it on a whopping 8 trades. So to me, that's not bad. It normally takes 10 trades, so it's not a bad day. And but and when we talk about psychological, numbers, we ought to go and define that. And the obvious one is the double O, for instance, the 2200, which we just crossed over a little bit ago. And then the next thing that you want to go and start thinking about is the 05 above it and the 95 below it. Those are.
Go ahead.
Oh, okay. Those to me anyway, those are psychological numbers. And then of course the ones that everybody likes to trade, so the double O's, the 25s, the 50s, 75. I don't trade those three usually all that much. I mean, I do, although I just took a trade off the 25 and made some money off of that. Didn't quite get to 25, but it was close enough that I was saying, okay, now it hit the 25, it's gonna, and we're getting signals that it wants to go down, so we'll go and take a trade once I get a signal that shows that it really wants to go down. But the idea for me anyway, this is how I trade psychological levels. Now, actually, before I do that, I'll tell you how a lot of people do it first. And what a lot of people do is, as soon as it's sort of like a line in the sand. And as soon as you cross the line in the sand, you put your trade on in the direction that you're crossing in the line in the sand. And then you set a reasonable, target of what you want to go and make. And you set a reasonable stop loss of what you're willing to risk on the trade. So if it crosses over the double O, then what you do is you set your reasonable target at 3 or 5 pips, and you put so that would mean that if it's going south like it did earlier, then you would go and put your TP somewhere down at 21.95 or something like that, maybe a little bit short of that, and then you'd put your stop loss up at 22.05, and that way you got a 1-to-1 risk ratio as those guys who are into measuring risk that way. So, which is it's not the best risk to reward ratio, but it's not a bad one either. And you just put it on and you wait to see what happens. That's how a lot of people do it. I don't do it that way. What I do is I wait for one of my normal setups to occur at a place that's a psychological level. So, for instance, I love taking a shorter or long, let's say it's a double O, and where I have a flip-flop box, or I just crossed over indicator 2, or, whatever the method is that's out there, and just that way, you're not just getting to cross the line, but you're also getting some type of, what those other methods are doing is showing you some type of momentum. So you're getting some type of momentum with the crossing of psychological number, and that, to me anyway, that seems to, work a whole lot better than just waiting for just a line cross. Line crosses, they work, okay, and the reason why is because people put TPs right at numbers that people like to use even numbers. They like to use double O, 10, 20, 25, 30, 40, 50, people love putting, TPs there or stop losses there. So price gets, drawn there. And so that's why it works. Or at least that's the story I'm telling myself why it works. But at the same time, I love going and using it, again. So like what I said yesterday with the Fibonacci, it's the type of thing where I don't go and base any trading method off of the Fibonacci. I use it as with Fibonacci, I use it as just another confirming thing. Whereas here I'm using those double O's. It's just like, oh, that's a place where there's going to be lots of people wanting to get to that point, and I've got a setup that's right there too. Oh boy, this is a place where I can go maybe make some money.
Yeah, and
so that's
back
my
to
2 cents on psychological levels.
Yeah, well, I define psychological levels as the double O, the 25 to 50, and the 75. Now, you had mentioned the 95 and the 05, and to me, those are the stop run levels. So I'm telling myself a slightly different story than what you're telling. But as far that I know, or what I've noticed, is the price will move from double O to the 25 or to the 75. And then from the 75, price is going to move to the double O or the 50. And then from the 50, it's either going to move to the 75 to the 25. And from the 25, it's either going to move to the 50 or the double O. And all you have to do is just look at the chart. We've got the 1 minute, but if you go up to, say, the 1 hour, you can see how this is true. I mean, today, it went to the 50, and then it moved to the 25. It went to the 25, it moved to the 50. From the 50, back to the 25. From the 25, back to the 50, and then on to the 75, on to the double O, almost to the 25, back to the double O, almost to the 75. And so those are things, if you have the patience, if you can wait, you can make, 20, 25 pips on these trades.
Oh, yeah.
And the funny thing is, it's not that difficult. I mean, you basically trade candle color at the line, and I'm kind of kicking myself because I was this was a news half hour, and price had gone up. It come back down, and I took a short. I think it was at 12, and what had happened was, as usual, I took a short somewhere around 12 here, and I didn't take my 1 pip when I had the opportunity, or 1 or 2 pips, and then it went back and ran up almost 10 pips against me, which is where I would have probably stopped out. And then it came back down, and I took my 2 or 3 pips, as opposed to thinking, another story I'll bring in. If it goes against me 7 pips, let's say, and then it comes back, chances are it's going to go in my direction 7 pips. I kind of call that the seesaw, but that's a different story. But it's kind of pertinent here because you can see what happened if I would have just stayed in that trade, at least down to the double O. And that's what I'm kicking myself for, not waiting for that to get to the double O. Because I even think Walmal, you had said something like, is this going back to the double O? Yep, not to mention, there was this nice return bar, which is another story that we tell ourselves. So I think you probably can gather from these videos, we just tell ourselves stories all day long, and you might tell yourself stories all day long too, but never realize what you're doing is, you might be thinking you're doing technical analysis, but chances are you're just telling yourself stories. I mean, that's what technical analysis is.
Yeah, you're coming up with a reason for what the market did. And the problem is that nothing is proven there. There's no fact there. It's just theory. And theory is something that's unproven. Now, if you can take advantage of it, so be it. And that's the thing. That's what we do as traders. We basically go and take advantage of the story, and and risk, and based on how strong we think the story is, and that'll go and maybe help us determine what we're willing to risk in terms of a dollar amount on a particular trade, and we go from there. That's all we can do. That's all we can do. It's one of those things where we just go and we play the odds, and we hope. And what else can I really say? Say to people, other than the fact that we know that we see things happen day in and day out, and because we see it happen day in and day out, take advantage of it. We could, like you just said, it runs from 00 to 25 to 50, or it runs from 00 to 75 to 50 every single day, and usually multiple times a day. And so we just have to be willing to say, okay, when we cross those particular places, what is going on? I like to go, like I said earlier in the video, I like to go and combine that with not just a line cross, but with something else. And that something else may be that, hey, we've got momentum here because we're crossing over, indicator 2. We got, momentum here because we've turned a corner and we're now going and seeing like a flip-flop box, or like what we talked about, the other day or yesterday, it must have been the 3LZZ. Do we have something like that that's actually showing that not only are we at the psychological level where we're crossing this line, where people like to go in, or not necessarily the market likes to go in a particular direction, but do we have other confirmations with it that we can play? I like playing the other confirmations with it. At the same time, you can do what TRO does and just go and play the lines itself, and they will both work. It's just a question of what your risk appetite is.
Yeah, and the thing about the lines is, playing off what Walmal, what you said, I think around, we talked about support and resistance. You say you don't draw a line, you look more like at a zone, maybe 2 lines, a min and a max. And that's kind of like
right
here. So rather than, say, put your TP, if you went short here, rather than put it at 75, I would have probably taken profit somewhere around 77. And you can see here, the low was at 76.6. So with the spreads I get, I would have popped out. So, if you've got a 2-pip spread broker, yeah, you'd probably want to take profit somewhere around 77 or 78, just because. And sometimes you might kick yourself, but once again, I always say I'd rather be mad with a profit than mad with a loss.
Yeah, exactly. It's sort of like what happened to me earlier, if you remember, Tierra, where I sat there and I said, okay, I'm going to get out here and I'm going to regret it.
Yes, you did.
And I got out and I got like 4 pips or something like that, which was a nice trade. But then it went and decided to go and run up another 5 or 6 pips,
Yeah, because I think I'm looking at I think I figured out the candle. Didn't you get out somewhere like around 7 or something? And then,
I got out at like 6.5 or something, like 6.5.
Yeah, and then that
ran to 10 or something.
Yeah, that candle ran up to 12.5, 12.5.
Yeah. But the thing is, you can't get upset about that. You got to just go and say, hey, my method says to do this. I'm going to go and do this. And what caused me to get out was that price stopped moving. It just sat there. And then it becomes, to me, at that point, it becomes a gambling choice, If I stay here, it's 50-50 whether it goes back to where my entry was or it goes up to the 12. So I look at it as like, I'm not gambling. I'm trading. Get out now and put the money in the pocket. A gambler would say, I'm going to take the risk at 50-50 odds and take the risk and see. I'm not willing to do that. I'd rather put the money in my pocket and wait for the next opportunity to come along.
Yeah, because the thing is, you knew there was another opportunity because we were going to have news in about 10 minutes at that time. So, yeah, and then, and we watched it do its thing. And, with this trade here, I was sitting here, I was really willing to probably risk more like 12 pips. I said, if this thing hits the 25, that's probably going to come back down. And you can see here, it made a higher high, then it made a lower high, and then it just, dropped like a rock since then. So, fellow traders, that's the psychological levels, one of the stories we tell ourselves. And once again, let us know in the comments what stories you tell yourself, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.